Are things starting to shift in the better motion in the economy? Hey, everybody, welcome back to another beautiful day in real estate. Today, we're going to just discuss are things starting to look better and why? So, the big conversation that everybody's worried about is worried about the crash of the US stock market. Everybody's worried about the crash of the real estate market, and people are very concerned about what's going to happen over the next year when it comes to interest rates, when it comes to the economy as a whole. So, let's just break the surface a little bit today. Let's just dive in. Take about 15 minutes. Let's go over a few things. As always, we're going to jump into oil right away. Oil prices are still on their way down. We have now seen WTI break below the $70 mark, which is at $69 a barrel currently. As we've talked about before, about $67 a barrel is where I'm expecting us to essentially fall, or at $67 to about, I would say about 66.9. So basically about $67 is where I think we're going to probably bottom. Something like this that you usually see is usually the end of a bull market. When you see things fall off so aggressively to this nature, typically that means that a bull market has ended. Same concept with Brent crude oil. We have seen the same factor. I wonder how high. From our most recent peak, it was about 28% down. And from the top of the previous, or the all-time high to where we are currently, or most recent high, we are down over 38%. So that being said, this is good news for the economy right out the gate, because when oil prices go down, so do gas prices, right? I'm not saying gas prices will fall tomorrow, because unfortunately that's just not how it works. However, it does showcase the fact that we are moving in the right steps or the right direction to start creating a little bit stronger economy. I've noticed a few things pop up. Number one, that I probably won't talk about much today because I don't know much about currencies, but so far the US dollar is gaining momentum on the Chinese or Japanese yuan, or yen, excuse me, yuan, not yen, or yen, excuse me, not yuan. Holy, I can't talk. But it is gaining essentially. So basically, where we're at now, it's gotten to the point where 161 yen equates to $1 US dollar, which means the US dollar is substantially stronger. And what they're raising interest rates and continue to raise interest rates in Japan, essentially to try and bridge that gap a little bit, and it is continuing to go the opposite direction. Japan has had almost zero interest rates for a very, very long time, and now they're pulling theirs almost up to 2%, I believe, on their U.S. Treasury or their Japanese treasuries. It is not looking phenomenal by any case of the matter. So, anyways, before I try to even explain that, because I don't fully grasp it yet, but my favorite stock that everybody loved for about 15 seconds, SpaceX. Where's it looking at this morning? SpaceX is going to hit the market or open here in about 30 minutes, and it's done exactly what we expected. It went up, ran up the first couple of days, and now it's just on its way down. There's no momentum. There's no volume. Like we've explained in previous videos, and I'm going to harp on this pretty aggressively because there's a lot of us out there that are going to fall for this every time. IPOs, or really any hyped stock in general, is going to have those. How do I put this? You have to understand that when it comes to buying, I'm trying to think how I'm going to explain this today. Okay. So stocks that get hyped, okay, that are all over the news, CNN, Fox News, X, Facebook, Instagram, talking about it's the next big thing. Red flag number one. These companies, although may have a tremendous outcome in a decade from now, in the immediate future, there's not much behind it other than excitement, right? That's how the crypto market operated for a very long time. You would get into something, it would run, you would see billions of dollars come in, because companies or people, retail investors, accredited investors, whatever, were all gambling at that time. There was no general structure behind it. So when you see stocks of this nature getting overhyped, we talked about Vivian was one of them, or Rivian, not Vivian, Rivian, and there was one other one. I want to say it was like Sundancer or something along those lines. Sundial. It was a weed stock in Canada during the 2021 bull market, and that was my first time to really grasp and understand a piece of this. And they say that you have to lose money in order to start understanding the market. I will kind of agree. Nobody steps into the market really fully grasping how dangerous it can be, one, and how hard it is to kind of pay attention to. So my point is that when you have something like this, the excitement is ramped up. It is excitement to the nine. Boom, 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 boom. Everybody's running, excited. It runs an aggressive amount, right? 50%. But the thing is when the liquidity dries up, which it does, the liquidity will always dry up. And shout out to Coach GV. He's been a mentor of mine for a long time. And he explains this very well, and I'm gonna rip him off a little bit here, but nothing goes up forever. Take profits, structure correctly, and move forward. We get so excited about these stocks that people are going to hold this stock up and down, and they're going to hold it. They're never going to sell it. They're going to assume that this thing's going to go to an insane amount of money. That's the mistake that most retail investors make. So I'm not going to keep talking about SpaceX anymore. This is going to be probably one of the last times I'll bring it up for now. But right now, it's showcasing exactly what happens. Money runs in, money runs out, people start to sell. Now you might be able to see yourself as an entry point. It depends on your investment plan. Some people can buy in. Now, I'm not saying it's a bad stock because I don't truly know what the next year is going to hold for SpaceX. I know they had a big $1 billion partnership recently and whatever. But even those partnerships that came out, I think it was announced yesterday, didn't really do much for the market. So this is why it's very important that we pay attention to these kinds of things and understand how they work. Now, lastly, before we jump into anything else, I'm just going to talk about the S&P 500. So the S&P 500 is starting to come back into this trend line, which is I shouldn't say trend line. No, this is a trend line. There we go. The channel is just way too bigger than I thought. So there was a channel that I built that basically structures that we've been in since 2009. We broke out, and for us to break back into it shows weakness in the market currently. I don't think it's going to stay here. I think it actually will take its next leg up. I think we're going to see a higher low, and then it's going to continue up, but that's my personal opinion as of right now. However, if the S&P 500 breaks below, let's just say it breaks below 7,000, as of right now, that's a pretty major support zone as of right now, because that was a major resistance for a bit of a time. If it breaks down below then, more than likely you're going to see a lot more money flow out of Bitcoin, and you're going to see Bitcoin go below. It was at about $58 at the bottom, 58,000, 59,000 was kind of that low point in the most recent. So right now, that's where we're sitting, right? If the S&P 500 breaks below it, more than likely we're going to see things starting to fall apart. Now, I'm not going to jump too more into the charts today because we do take up a lot of time just looking at them, and honestly, they're not as relevant as the storyline. So this is an important thing that I want you guys to pay attention to. It's a minute 30. Just hold your horses.
President Trump is doing here is, if you look, the new Venezuela is invoicing in dollars. They're coming back onto the dollar system. They've been sanctioned. They were not allowed to translate or to transact in dollars. And now the dollar is going to be the centerpiece of their trade. They were selling discounted oil to China and not getting dollars. We're seeing in the Iranian negotiations, the Iranians will be invoicing in dollars. So everything we are doing is pushing the dollar back. It's never left as the centerpiece for the global currency system, but we're reinforcing it. I would anticipate when the Russia-Ukraine conflict ends, that Russia will want to come back in the dollar system because, again, the dollar, it's our liquidity, it's our capital markets, it's the depth and breadth. Everyone wants to be here. And I think many times, the great thing about the United States is we course correct when we go too far one way or the other. And I think we should not be shy about flexing where we have advantages, and where we have advantages, share with our allies and push back on those who are not aligned with us.
So this is a very important thing that we should be focusing on. Now, for those of you that haven't been paying attention, back in 2021 to about 2025, beginning of 2025, we saw a significant amount of regression away from the US dollar. The dominance, the trade value, so many things started to pull away. The BRICS nation became more powerful. That's Brazil, Russia, India, China, and son of a biscuit. What's the last one? Is it Saudi Arabia? I can't remember. But anyhow, basically, they were pulling away from the US dollar and its dominance. And now what they're doing and what they're starting to successfully do is they're creating a dominant power behind it. Again, you're seeing the US dollar gain against the yen, right? The Japanese yen. We also are seeing GDP starting to move in a positive way, right? GDP for Q1, Final estimate came in at 2.1, expectations at 1.6. U.S. economy growth is accelerating. This leads to a growth period where stocks and investments and things like that are going to continue to run. So, I'm starting to see, and my optimism towards a crash is slightly slimming. We're not saying it's not going to happen, right? It's still possible, but there are good things coming now where we're seeing growth. And when you see growth economies, more money is created and people feel comfortable once again. And we haven't been there for quite some time. We've regressed away from the development in the United States of product and companies and growth and anything along the economy. We've weaned away and became very reliant on other countries. I don't know why I keep saying companies, but other countries. And now that we are moving back to a self-reliance, things are starting to get stronger. More countries are willing to invest and build factories here and build things that are going to help grow the economy. Deregulating in some cases. There's the Century 21 Act that's going into effect. I believe it passed through the Senate just the other day and on its way to President Trump's desk, that essentially will remove enough red tape to reduce. And I saw this number, I don't know how accurate it is, but they're saying it could reduce up to $132,000 to build a home. I think it said 26% of building a home comes from the regulation portion of things. That's permitting, that's zoning, that's anything. If you live in very different states like California, Seattle, or excuse me, Washington, states that are very climate conscious, right? Or something along those natures, they usually have a lot more restriction behind everything that you can build. And it costs the builder so much more money, which in turn costs more money for the buyer. Now, it is one of those things where once it's implemented on a federal level, local government will have to adopt it. It's not just across the board blanket, right? But it will and could progress to more growth. And we need more growth. So you create more dominance in owning and running Venezuela. I shouldn't say owning, but running Venezuela, right? Taking over and reestablishing. You open up the gates and start using Iran as a trade partner, not necessarily an adversary or a enemy. And then you start taking the dominance away from China, which was starting to gain ground pretty significantly. When you do things like this right now, it's slowly chipping away at what the structure that the BRICS nation was building and bringing it back to NATO or bringing it back to the U.S. dominance. And that's something we haven't seen since the 70s and the 80s during the Nixon eras. Obviously Nixon was in the 80s, but that's where a lot of us are not really seeing that 30,000 foot overview. It is truly remarkable the amount of times I jump on social media and people are laughing at anything that's positive just because of the person who's creating the positivity. I'll use Elon Musk as an example. He's done a lot of great things. He's established lots of great companies, employed thousands of people. But every time he makes a mistake, people feel the need to just destroy every piece of him. We need to get away from that. We need to get back to how can we build together? How can we become one economy again? And there's so much separation, but that's a conversation for another day. Now, another thing that we're starting to see is the Fed balance sheet is starting to increase, meaning quantitative easing is starting to be created, or the ability to inject cash flow into the economy, right? The Fed's balance sheet climbed to $6.7 trillion, the highest since March of 2025, as total assets have risen to $162 billion since the start of the year. They're buying U.S. treasuries with U.S. dollars. So they're artificially lifting the bond market, right? Now, the important thing to pay attention here is what happened during COVID. Like the peak of COVID up here, I would say right around this area, right before 2023 is when we peaked. And then we started to move towards quantitative tightening, which led to the struggles in the economy. And now we're starting to see an increase again. When we see this, that just means to me, if we look at historical data, when it starts going up, we're in, I shouldn't say starts. This was kind of a shorter chart, but 4 years ago, we were at the peak of a bull market. Are we on our way into a new one at this point? It's plausible. I don't necessarily think we're quite there yet, but we're getting there. We're getting there. And that's what's really fascinating to me, because 6 months ago, a year ago, things looked so bad on paper that it didn't look like we were looking towards anything other than a major recession, a major economy issue. And I mean, we very well could be on our way there yet, but we're not. We're starting to turn the rudder on the ship, and we're going to start turning around, and we're going the other way. So another thing that I'm paying closer attention to is China's bank with over $10 trillion in assets shut down retail trading. The reason I brought this article up, not because of what happened, but I mean, it's kind of crazy. You can't do retail trading. The banks of China are basically building up as much of an asset stash as they can with gold. But we're starting to go back to the mentality of hard assets are valuable. Hard assets like gold. If we start reverting back to the gold standard mentality, that creates stronger growth as well. Basically, what we're seeing is countries were starting to buy up more gold, in China specifically, large amounts of gold, so that we continue to stock up. Now, my best guess is these countries are anticipating that gold is going to go into its own bull market even more aggressively than it has been in the most recent months, most recent year. The most recent months has been a little bit slower, but so gold is finally, is breaking below that 4,000 range after, and I like these double tops. It's usually pretty goddamn easy. But let's say we went all the way back down to August of 25. To the peak was 68% returns. And that peaked in January of 2026, which we have now seen. I don't know why I'm on the 4-hour chart. There we go. That looks way better. All right. Oops. And now we're breaking below it, and we're starting to find that major support zone, which is going to be right here. If you guys are noticing, we're kind of finding that bottom right now, right? I mean, we might have a little bit more down to go, but my best guess here is we're starting to get a little bit closer to a bottom, and we're going to start to see the price of gold go back up again. Silver, honestly, it's getting pretty close to the same mentality right now. We'll see. We'll see how it kind of progresses. What the actual F? I don't want that. Anyway, but my point of this was we're starting to see these bottoms. Look at how quickly that volume fell down, and then look at the stochastic. Stuff like this is extremely oversold. It doesn't look great, but it could be, and very well, we'll pay attention to this over the next few months, but it very well could start to take off again. I might start entering in gold once again. I'm a big fan of gold and silver, and I honestly will probably continue on buying gold and silver here as we get closer to the end of the summer. But that is what I wanted to talk about today. We're starting to see strength in the economy again. It's very slow. It's very, very persistent. And we will continue to keep track of this as we move through it. So thanks for watching today, you guys. I hope you have a beautiful day. Like and subscribe for more content about the economy. We'll see you soon.